This is Dale Snyder with the Snyder Group at Keller Williams Realty here in Las Vegas, Nevada. As many of you may know already, we do specialize in helping investors build their portfolio in the residential real estate market. And you're probably getting our investment newsletter we send out every couple weeks. Maybe you've received some of these forms that I'm going to discuss with you. But I thought it was important to go over this in detail because I've had a lot of questions over the last year or two with investors of ours that have purchased properties. First, I just want to say, I have the designation that's a CIAS, Certified Investment Agent Specialist. You can find out more information about that on CIAS.com if you'd like. You can go to our website, dalesnyder.net, or our YouTube channel at Dale Snyder 1 to get more information about us, our team, and videos that we've created in the past. So just to give you a quick overview, I have one investor who's a dear friend of mine. He bought 15 homes last year. All of them are leased, and his average cash-on-cash return is about 12%. So the numbers fluctuate drastically. Depending on how we crunch the numbers and what happens over time is going to dictate whether you're going to get a break-even year on a property, a 5% return, a 10%, 20% return. It's going to fluctuate. So I always give conservative, realistic numbers, which you'll see on our forms are usually around 4 to 8%. So let me jump right in. You probably can't see these, but at the end of the video, we're going to have one of these put up on the screen. So let's jump right in. We have a Summerlin home listed at $165,000. We calculate the gross annual rent as $19,800, which you can see next to it is going to tell you what the monthly rental income would be. We factor in property taxes, insurance, the HOA. We put in property management at 8% of the yearly rental income. Trash and utilities, $400, lawn service about $500, because they're low maintenance. We usually put rock and take the grass out. Most of these don't have pools, so we don't factor that in. Maintenance of $900, and that includes getting a home warranty every year. If you buy 10 homes or more, you get a 25% discount on your home warranties. So if you get those or not get those, that's going to dictate the pricing. Vacancy reserve of 1 month. The total expenses minus your gross annual rent gives you your net operating income. Any of you savvy investors already know what cap rate is, and how it's calculated. You're going to see the cap rate is the net operating income divided by the property price. That is going to give you your cap rate. That's more of a term used in commercial real estate, and quite honestly, we use it in residential. That way it makes us seem like we're smart and you commercial investors want to talk to us, being honest. But cash on cash, I think, is the more appropriate one, and that's what I'm getting to next. Net operating income divided by the debt service gives you your cash flow. That's assuming you're financing. If you're not financing, that's going to tweak the numbers a bit. So we're doing a 30-year fix. The average investor rate right now is a 4.5% interest rate. And we sometimes include in the closing costs the rehab on the property and then the cost of getting your loan. There's always fees. So we calculate that in as well. If we take that out, it changes the numbers. And some of the investors I work with like that taken out because that is a one-time fee, unless the home gets trashed by the tenant and then you've got to do the rehab again. But that's another side conversation. And depending on how you want me to run the numbers will dictate how you'll receive these forms. So most importantly, we need to communicate on the numbers, and then I'll send them to you appropriately. This one here is done cash-wise, and you'll see the return, the cash on cash, is going to be your cash flow divided by your amount of down payment. So if you're getting 0% down, if you're getting a 0% return on your money in the bank, it's 0. If you're getting a 1%, your cash on cash return is 1% of the money you have in the bank. And in real estate, the cash on cash is either your 25% down or your 100% down. So it's going to fluctuate. So on this one, we've got the cash on cash at about 6.7%. That's doing it as a 100% cash transaction. Over here, same deal, but we run it as a 25% down, and your cash on cash goes up to 8.2% because you're levering up. You're leveraging your money. You're only paying 4.5% for that 75% of the cash, so you're able to get a little bit more. And a lot of our investors are either paying cash on the front end and refining money out on the back end, or financing on the front end and waiving the contingency of financing to get their offers accepted. Going on to the third example, this is where the money your cash on cash can really go up. We never run the performance like this because we want to be more conservative. But we're going to run the rest of these as financed. And on this one, we're saying $0 in closing costs. Meaning we're not factoring in your closing costs for your loan and the rehab cost, because that could be a one-time fee. That could run you up to about a 10% return on your money. Over here, we've taken out the vacancy. Let's say your tenant has done a 2-year lease or they stay, so you don't have that 1 month's vacancy the second year or possibly the third year. If you take that out, that's going to run you up to a 14% cash-on-cash return, which is huge. Then let's go over here. Let's say you're not going to use a property manager, you're going to do it yourself. So you take that out, and let's say you have a tenant that has stayed, so you don't have vacancy, and you're doing the 25% down, and now you don't have any other costs in the rehab or in your loan. That's where you get to an 18% cash-on-cash return. So if you're a portfolio investor, most importantly, if you have 10 properties in your portfolio, a percentage of those, the tenant's going to renew, you're not going to have any rehab costs. Sometimes the tenants are going to move out, you're going to have rehab costs. The portfolio is going to fluctuate. The client that I worked with last year, right now, he's getting about a 12% return. In another year, I'll see where his numbers are because we'll see what the turnover was like, what his rehab costs were, and I'll get a better pulse on what his portfolio is. So, in summary, you're going to get about a 5% conservative return on your money, and it'll only go up from there. So I hope this information was valuable. If you'd like to discuss this in more detail or interview my team and I for potentially, assisting you in this process, please reach out to me. We've got a crew that does all the rehabs, property management, we run performance on these daily, and so we're basically a one-stop shop. Dale Snyder with the Snyder Group at Keller Williams Realty, discussing investments in the Las Vegas market and how we run the performance and what your cash-on-cash expectation should be. Have a great day.